What up, folks? Welcome back to the Gauntlet. Number 2. We're going to start 2026 off like we're supposed to, with consistency and persistency, because that's what wins in the market. OG thinks he's right all the time. I am right all the time. Why am I right all the time? Because I read what the chart says. Leading by example. It's accountability on steroids. I love to do it. People think they're debating with me. No, you're debating with the chart. I don't care what chart it is. So, all these things that I've learned, I call it forward testing. I don't back test. So to forward test, you're always getting new information, right? Just like on the chart. There's always a new candle. The higher the time frame, the stronger the signal. The daily chart, you want to start there. Why? Because we start on Sunday. Sunday, Monday, Tuesday, Wednesday, Thursday, Friday, Saturday, all that good stuff, right? So the market opens on Sunday at 3 p.m. Pacific, right? Asian session. You go from Asian session to London session to New York session, and then you start over, right? So this is the gauntlet, right? We're going to come in and talk about things that are specific. The 10-year yield. We incorporated the Japanese 10-year yield. There's special things happening over there that have to do with all of us. But I wasn't taught to look at these things. So after the 10-year yield, we have the dollar, right? So the 10-year is the cost to borrow the dollars. And then the dollar index is actually the value of the dollar versus the rest of the world's currencies, or a certain handful of them, right? And then the fear and greed indexes for the stock market and for crypto. Oh, and the VIX, the volatility index of the S&P 500, the stock market. So we'll start with the 10-year. We know, and this is to give you information that you're not privy to all the time, right? Because we have the 98 percenters and we have the 2 percenters, right? You want to keep that in mind. What is a 2 percenter? Trump is a 2 percenter. Elon is a 2 percenter. Zuckerberg, Gates, Bezos, Buffett, they're 2 percenters. The billionaires, right? How the wealthy stays wealthy. How are you going to become wealthy? Well, you have to gain the information that it takes to become wealthy. It's the knowledge. Generational wealth building knowledge. Generational curse breaking knowledge. The cost to borrow dollars. Who decides the cost? Well, the Federal Reserve is in control of short-term interest rates, but they're not in control of the long-term. I'm just telling you how I've received it. You have to be listening to hear these types of comments, and then you're like, okay, that's how it works, right? The Federal Reserve has a federal funds rate, right? That's what they're moving, right? We just cut the interest rates by 0.25%, and the Fed funds rate went from 4% down to from 4% to 3.5 or 3.75, and from 3.75 down to 3.5. While the 10-year, what we're looking at, this is not the federal funds rate. This is the 10-year yield, right? You see it's roughly at 4%. So it's basically 0.5% different from the federal funds rate, which means I don't need to pull up the federal funds rate chart. I just know that there's a 0.5% difference. And the goal of the Federal Reserve is to maintain maximum employment and keep interest rates under control, inflation. Keep inflation under control. The way they keep inflation under control is by maneuvering the federal funds rate. Because we're taught that, oh, when they drop the interest rates, all interest rates go down. Well, no, they don't. Not initially. Last year, when we cut the 10-year or cut the federal funds rate by 0.50, the 10-year yield went straight up. From October, November, December into January, the 10-year yield went up when they cut the interest rates. Now, that was a forward test last year, right, during the election. They were trying to say that the economy is great and everything's going smoothly, and we gained 800,000 jobs when we really lost 800,000, and it wasn't 800,000, it was 1 million jobs that we lost. I knew we were losing the jobs because the companies reported at the beginning of the year how many jobs we were going to lose. It was a lot of jobs, and we lied. We'll say we, since it's our country, we lied. So I have to explain these things because it's part of my forward test. I know this because it's what I pay attention to, and when I get the information, I'm able to speak it out to you, right? We're talking about Jerome Powell, the chair of the Federal Reserve, is the one who raises and cuts the interest rates. So we're no longer raising interest rates, at least as far as we know. We stopped quantitative tightening on December 1st. And now, because of stopping the tightening, we are now easing. Tightening consists of raising interest rates and the stopping of the printing of money in mass amounts. Once we stop tightening and go into easing, we now are cutting interest rates and preparing to print tens of trillions of dollars. And it's going to go straight into the market and cause the market to skyrocket. I've never seen it before, so it's part of my forward test. I'm waiting for the cuts. We cut in September, 0.25. We cut in November, 0.25. And we just cut in December, 0.25. So that's 0.75. Jerome Powell says that we're probably not going to cut as long as he's there. We don't know what he's going to do. January 28th to the 30th is when we're going to find out. You have to know these dates. You need to know it when they say it. These are forward tests. Whenever I get new information, I jot it down, and I'm able to spit it out to you, right? Because what else is there to do? This is the job, is to be in the know, right? You're going to be ignorant or you're going to know, right? If people are too busy being slaves, they don't have time to figure this stuff out. I have time. So January 28th. We're going to decide if we're going to go and do another government shutdown, and we're also going to decide on whether we're going to cut the interest rates or stay paused. We cut 3 times. He's kind of referencing that he might pause. He can't raise. You have to understand another part of the forward test. When we stopped raising, right, we raised the last time. Again, a lot of people weren't paying attention that we raised the interest rates 11 times in a row. And when he was done raising, which is crazy, he raised 11 times in a row. He didn't say, oh, I'm going to do it 3 times and then I'm going to stop. No, he kept going. Why is it that when you raise, you can keep going, but when you cut, you can't keep going? Poor people can't do anything at a 4% interest rate. Only the rich. It only benefits rich people. So we need you to bring the rates down from 4% to 2% so people that are just normal citizens can afford to borrow dollars at a cheaper percentage rate. You see how I'm able to regurgitate this? Because I'm in the know. I want people to get in the know so you're able to trade and invest properly based on the information that you have, but you have to want to know. You see the 10-year, it's at 4%. It's supposed to be at 2%. And why I like to butt that up next to the Japanese 10-year is because the Japanese 10-year came from 0. And they're already at 2%. But they went up to 2%. We're coming down to 2%. I don't know if it will happen or not happen, but I do know that Japan is on time. They went to 2%. And now it's starting to make a little pattern. This is why you use the daily. So you can see the daily. All those candles are daily candles. Look how many days in a row that the Japan 10-year went up. Now people are like, oh, I don't know about the Japan yen. You're right, because it's too expensive to borrow. It was at 0. So if it went from 0 to 2%, what's so hard for the U.S. to get from 4% down to 2%? Because that's where we need to be. That's that again. Well, I forgot to go into the mandates of the Federal Reserve to keep maximum employment and keep the inflation under control through the cutting of the interest rates and raising, the manipulation of it. So he's saying the Fed wants the rates down to 2%. That's their goal, is to get the rates down to 2%. And we're still not at 2%. Well, the only reason we really want to cut the interest rate is if unemployment is out of control and inflation is out of control. And they're both out of control. Well, inflation is coming down. So I guess whatever we were doing worked in that fashion. But the unemployment is going to skyrocket. So it's good to come in here and have this conversation. I call it the gauntlet, where we come and talk about these things. We talk about, let's go to the dollar. Well, we talked about the dollar. The dollar's down, right? Why is the dollar down? There's a difference between the 10-year yield, the cost to borrow, and then the value of the actual dollar itself, the value. Now you see, again, daily chart. These candles are coming down all these days. Why is that? You got to think supply and demand. I don't want to make these videos too long. I want to keep your attention. Everything I tell you is saucy and referenceable, but a lot of it will disappear from the internet. You have to be paying attention whenever they say things, and then you're like, okay, I verbally heard it. I physically heard it. Because if you try to go and type it into Google, you may not be able to find it, which is why I'm like an antenna. I pay attention to all this shit. So I'm just kicking it out to you. Anyway, the dollar is falling. Well, when you print dollars, you're supplying dollars to the system. The more dollars you have, the more it will fall. But they manipulate it. Now, okay, well, if you put in dollars and it makes the dollar drop, think about it. Let's say it's toilet paper. If we have one roll of toilet paper, then the demand for in your city, if there's only one roll of toilet paper, then the demand goes up. But if there's 1 million rolls of toilet paper, the demand goes down, right? Because it's oversupplied. We're about to print tens of trillions of dollars. They're preparing for this because their interest rate is not down where they want it yet. So they're trying to weight this thing, Trump and the people. They say Trump and his rich friends, right? It doesn't matter who it is. Nobody wants to do anything at a high interest rate. You want to do it at a low interest rate. Everyone in the world, right? So they are cycles. You have a cycle of a high interest rate, and then you have a cycle of the cutting of the interest rate. And in between, when you stop raising, you got to pause, and then you got to cut. And then whenever you're done cutting, you got to pause, and then you got to raise. You can't go from raising to straight cutting. No, you have to go through a pausing cycle. So this is the sauciest, like when they say, oh, OG thinks he's correct all the time. I am correct all the time because I'm reading what the chart says. People like to go against what the chart says. A lot of people don't even have a chart. They just think they know what they're talking about, and they don't. You can't. We all have access to charts. So if you don't know, you just don't. You're ignorant, and you walk around frivolously ignorant and bashing people over the head with what you think you know. All right, let's go to the VIX. Come on, let's go to the VIX. This is the daily chart, the VIX. Why is it dropping like that? When the VIX drops, the stock market goes up. A lot of markets go up. Silver's going crazy right now. The metals markets are going crazy. The VIX, the volatility index, this is a representation of the volatility of the stock market. If we want the pulse of the stock market, which is the S&P 500, it's not the Dow Jones, the US 30, it's not the NASDAQ, and it's not the Russell. It's the in-between. The stock market, if you want a temperature check on the stock market, you want to check the S&P 500. That's why the VIX is represented on the S&P 500. So when the VIX drops, the market is usually spiking. And when the VIX goes all the way up, then the market is usually dipping. Another forward test. I don't back test. I only forward test. I gain information as I go forward. I can go back and look at things, but I don't do that too much because I already know what's going on. I just need where it's at right now on the higher time frame, daily, weekly, monthly. You want to see what's going on. Every time a new candle comes out, you want to go to that chart and figure out what it's saying. So daily, we go and check the daily. Weekly, we go and check the weekly. Monthly, we go and check the monthly. And there's a time. You see the time on the candle. It'll tell you how much time is left on that specific asset or whatever it is that you're tracking. And when you want to do your entries, you go down from the 1 day down to the 8 hour, the 4 hour, of that nature, right? So that's the gauntlet. We want to put this out every week before market open, New York session, right? The session markets opened yesterday. A lot of people don't know that. Once you get into trading, you'll get in the know of that, right? And that's what we're here to do. Promote the truth so that you can get on the train. You got to surround yourself with people who know. Get in the know, stay in the know, and you can get on the train. And don't forget to pay it forward because you don't want to leave nobody behind. There's a transfer of wealth that's happening. It's a separation of the rich and poor, an elimination of the middle class is what's going on here. You do not want to be caught up losing in this situation. So you know who we do it for the people, not the profits. It's the consistency and persistency that wins in the market. To beat the market, you must become the market, and the market moves with integrity through its price. And if you lack integrity of the price, you get wrecked. And you know where you're going to go. You're going to go to loss review and talk about how it's the psychology. No, you were taught by a clown, a predator, someone who's using marketing schemes and pyramid schemes to lure you in. And you'll lose because it's not set up for you to win. Trading is life, and life is trading. Hey.